Hi there, Brock VandenBerg with TaliMar Financial, your trust deed investment advisor. Today, I want to answer a common question that we get, which pertains to the payoff demand and when to expect the payoff. Now, let's take a step back and walk through the payoff process. Typically, the first step in the payoff process is either the borrower, an escrow officer, a mortgage broker, or a bank request a payoff demand from TaliMar Financial. We forward that request off to our loan servicing company, FCI Lender Services. FCI will typically draft the demand within 3 to 5 business days and send it back to TaliMar Financial for review and approval. Once we have approved the payoff demand, FCI will then forward that approved demand to the requesting party. Now, on that demand, it'll include the principal balance of the loan, any outstanding interest payments, including future interest payments, any outstanding fees and whatnot. Now, the two main reasons why a borrower may be requesting a demand is, first, it might be a refinance of our loan. Now, in the case of a refinance, a mortgage broker or a bank will typically request that payoff demand early in their approval process. That's because they want to ensure they understand what the principal balance of the loan is, that they're refinancing. They want to see the payment history. They want to make sure the loan is current and see some other various items on that payoff demand, which means the payoff demand doesn't necessarily mean the demand or the payoff is actually going to occur. In fact, we may actually get 2 or 3 requests through our borrower, our clients or borrowers refinance process before the actual payoff occurs. The second reason, obviously, is a payoff of the loan is from the sale of the property. Now, obviously, the payoff and the execution of the demand is predicated on the seller actually going through with the sale of the property and the buyer performing. And so one of our borrower in the sale of the property may go through 2 or 3 escrows with different buyers until a payoff actually occurs. So it's really predicated on the sale, the final sale of that property. Now, a common question that we get is, what happens when the payoff actually occurs? Well, those funds are typically dispersed from the escrow officer handling the refinance or the sale, are either going to be wired or overnighted to FCI, who will then process that payment. And usually within 24 hours to 36 hours, they'll go ahead and disperse those funds to the lenders. That's if the lender has ACH or direct deposit. If you as a lender are receiving your disbursements by check, they're going to send that check out to you the following Friday of the week that those funds were received. Another common question we get is, Brock, would you please follow up with the borrower and ask what the duration or when we should expect the payoff? Well, we'd love to do that in every circumstance, but we would be literally on the phone with our borrowers every single day asking for an update on the payoff. It just simply isn't feasible for us to request an update. And really because our borrower doesn't even know either. He doesn't know when the refinance is actually going to close. He has kind of some idea or on the payoff of the loan. Now, we understand our lenders want to get a little time frame on that so that maybe they can roll those funds into another trust deed. And we try to do our best to accommodate that. But in reality, it really is kind of up in the air as to when that payoff will occur. So hopefully this answers some of the questions that you have regarding the payoff demand, what it means, the timing of the demand. We are always here to answer any questions that you have. If you're interested in learning more about investing in trust deeds through TaliMar Financial, feel free to give me a call. Look forward to talking to you. Thank you.